Hey guys, happy hump day and happy early turkey day. So hope you guys are doing good. Hope the family is good. Hope everything is good. Just want to bring you some an update on the market in case you haven't been watching it a lot lately. So basically, yeah, as the title of this video says, crypto, the Great Depression. The more I look into this, the more I think this is going to have some kind of lingering systematic issues in the financial sector. Why? Because this goes in pretty deep in terms of who's invested in the crypto market and who has lost a ton of money recently, such as like major institutions, um, such as banks. Actual banks are involved in this current crypto charade that's going on. I mean, Silvergate's, which is a bank, their stock has been completely destroyed because they were involved in the crypto space, right? And as FTX filed for bankruptcy, since Silvergate has connections to FTX, which is the crypto exchange that recently went bankrupt, and all kinds of fraud allegations going on there. So Silvergate basically lost 50% of its value in the past month. The bank has been connected or deeply intertwined with the global crypto industry, such as Coinbase, Kraken, Gemini, Genesis, and so forth. So basically, a lot of these cryptos exchanges are locking or preventing withdrawals, meaning if you have money with one of these crypto exchanges, you can't get your money out. And what that has done, it has basically created the new bank runs, right? Because this is not a regulated industry. They don't have, the lender of last resort on the crypto market doesn't have the lender of last resort on its side, which is the Federal Reserve, right? And they don't have the FDIC, the Federal Deposit Insurance Corporation. So it's basically a contagion, that is going to continue on till I don't know when. But this is not the time to touch the crypto market. I feel like this contagion, which is a virus that is just spreading around, it's just getting started. I mean, these implosions are starting to, pop up every couple of months, such as Terra and Luna that completely wiped out billions of dollars in, I don't know, matter of days or something like that. That happened back in March early this year. Now, FTX recently went bankrupt. So what's next? I mean, who else is caught in the crossfire? Who knows, right? But I am definitely not interested in finding out, with my money at risk. So yeah, it's kind of crazy to me because the more I look into this, the scarier it gets. Such as there's pension funds, there's 401ks that are invested in the crypto market, which is crazy to me. People taking that kind of risk with their retirement money. Hey, it's your money, do as you wish, right? But to take that kind of risk in the most volatile potential way makes no sense to me. So yeah, FTX filed for bankruptcy recently, one of the biggest exchanges in the cryptocurrency market. Another blow to the economy again, because there's pension funds and retirement accounts, and this goes deep, man. The kind of connections that all these different banks and so forth have into the crypto market. I mean, big top players, BlackRock is um invested in the crypto space. So SoftBank, the Japanese giant investor that is the major owner of the Philadelphia-based delivery service, wrote off its nearly $100 million investment in FTX. So complete loss, $100 million loss for that company. Pension funds in Pennsylvania and New Jersey. This is wild to me. Unbelievable that pension funds are taking this kind of risk with people's retirements. That's why you should literally be aware where your money is being invested by your retirement account, because that is out of your control. And if you're not looking at it, these people are doing whatever they wish with your money, right? And who pays for it at the end of the day? You and your retirement. So again, pension funds involved in this, it's crazy to me. So yeah, the Pennsylvania Public School Pension System Board has 5 million of its nearly $7 billion in assets invested in FTX at risk of loss. That's a complete loss. Another additional 1.3 million. So, and that's what they're basically sharing, because I noticed a lot of these institutions right now are being dishonest because they're embarrassed of what is going on and the amount of money they're losing so quickly, because they got caught in the FOMO, got caught in the herd mentality. And dude, when things are going wild and overvalued to that extent, that's when you want to get out. That's when you want to be a seller, not a buyer, right? But hey, again, the retirement plan, SERS, for state troopers, judges, social workers, state college professors, and other Pennsylvania government employees, has also invested with Insight Partners, which are correlated with FTX, right? So complete loss right there in that investment. SERS has not directly invested in Bitcoin or other cryptocurrency, but does have around 6 million invested with financial firms that do have a sizable portion of their business in the cryptocurrency industry. Again, another New Jersey pension fund. Delighted crypto boosters early to 2021 when it made what crypto exchange CoinDesk at the time called multi-million-dollar bets, and on two of the industry's biggest names. So as you can see here, BlackRock is involved in this too, but specifically the New Jersey State Pension Investment Portfolio was investing in miner companies, like crypto miner companies, which I believe is the worst business in history. It's literally just operating costs. The amount of money, and I've actually gone through their finances, the amount of money these crypto miners spend on operating expenses, just on electricity. They can't pay their electricity bill. What kind of business is that? On the hope that they mine a specific amount of Bitcoin that they then lend out and get paid interest on. And being as the value of Bitcoin is going down, and that is the one purpose of the mining companies, that hopefully in the future Bitcoin's price is going to be a lot higher than it is when they purchased it, right? So these crypto miners, my guess would be, within the next couple of months, they're all going to be bankrupt. They're all going to be filing for bankruptcy. Another thing that's probably going to hit Bitcoin's price. So yeah, it's just a crazy, that pensions and institutions are involved in this with people's retirement money. It's wild. Again, another one, Ontario Teachers Pension Fund. They had money in FTX, which is complete loss. I mean, you are getting zero back out of that. Invested 75 million in FTX Internationals and its US entity, FTX US. 75 million gone with the wind like that. I feel bad for the teachers that have their retirements linked to this fund. This pension is ridiculous. I think this should be criminal. It's taking that kind of risk with people's retirements, and this is complete loss. That is, you're not getting nothing back out of that. It's just amazing to me. On another note, again, BlackRock being involved in the crypto market, along with taking a large hit off of the Russian market crash at the beginning of the war after the sanctions got hit Russia. BlackRock has lost $1.7 trillion in 6 months. And BlackRock is considered one of the 9 too big to fail companies, meaning if BlackRock were to fail, that is a catastrophic financial, economic, global economic situation. That's the point where, you know, now the Federal Reserve has to get involved and bail them out, because otherwise it's going to be in a horrific collapse. So BlackRock breaking records, losing that crazy amount of money. The market is wild. That's all I can say, really. In reality, the market is wild. So yeah, plunging crypto values are hitting all these different companies, including banks that are caught in the crossfire. So I feel like this is going to lead towards some kind of economic problem over, I mean, globally, because there's so many companies and actual banks that are now coming out and they're linked to the whole crypto market, and they've taken massive losses recently. So yeah, I mean, these crypto companies are filing for bankruptcy left and right. It's a contagion. It's literally a virus that is spreading around, and it's like a domino effect. They're all just dropping like flies. Voyager filed for Chapter 11 bankruptcy, blaming contagion spreading through the sector. And this is Voyager's collapse was due to the bankruptcy of Singapore's crypto hedge fund, Three Arrows Capital, which Voyager had lent 650 million in cryptocurrency. Again, Three Arrows collapse, the hedge fund collapse due to the Luna coin implosion. And so yeah, wow. So yeah, it's just all these companies are basically dropping like flies. This is the crazy part. Fidelity Investment in April allowed companies to include Bitcoin investments in their 401ks, define contribution benefit plans. Guys, I mean, I don't know what's going on with, you know, the market these days, but it's crazy to me that, you know, this kind of risk is being taken with retirement accounts, because now potentially this could lead on to more people dependent on Social Security, which is already technically a bankrupt system. So it's crazy. It's crazy to see this. But isn't, and then since cryptocurrency is unregulated, is unknown, you know, to where the contagion basically may lead. So that is the scary part. You don't know how deep this might actually go towards. So yeah, 401ks by Fidelity allowing investors to buy cryptocurrencies, which in my opinion is speculating. I mean, I'm open to the technology and all that, but in reality, come on, it falls within the speculating realm of things. And then on another note, something I found super interesting, every time there's a rate hike in the market by the Federal Reserve, it completely hammers the crypto market. For example, back around 2015 through like 2018, which was the last rate hike, you can kind of see the numbers over here. That was the last time that Bitcoin got hit pretty hard. So let me just swap over here. So yeah, you can basically see here, that was the last Fed rate hike back in 2017 all the way to like late 2018. Crypto market got completely hammered. Well, Bitcoin in this case, because that's the chart we're looking at. Now look at the current rate hike cycle. Completely hammers the crypto market, specifically on Bitcoin. And I mean, it makes sense because cryptocurrencies are highly leveraged. A lot of people take a lot of risk in speculating with them, and they borrow money. They buy them on margin, which is, it's crazy to me, but people take that kind of risk. So yeah, Bitcoin is not looking very good. And yeah, I was kind of looking into this because this is you know, occurred in the past, right? So the Panic of 1907, for instance, had modest origins. A group of speculators suffered a big loss after they tried unsuccessfully to corner the stock of the United Copper Company. The speculators were known to have close connections to New York City banks and trust companies, bank-like financial institutions. Depositors had no idea whether their particular institution had financed the speculators. And in an era before federal deposit insurance, which was founded in 1933, naturally they lined up to withdraw their cash. The runs spread, sparking a nationwide financial panic that contributed to a serious recession. The ultimate economic cost of the panic far outweighed the magnitude of the trigger, a failed scheme by a handful of speculators. So the 1907 panic, which was a panic that began causing bank runs all over the United States and the globe, you would say, did not have any backing at that time. The Federal Deposit Insurance Corporation was not around to protect people's bank accounts back then, and that was a big reason why it was created shortly after the Great Depression. So literally, bank runs are going on right now in the cryptocurrency world via the all these different exchanges. That's why they're locking people's ability to withdraw their funds, because bank runs are currently occurring in the crypto market. That is a panic. That is a contagion. I just am curious to see if this somehow starts affecting actual banks and other institutions, because the connections are pretty deep. Pension funds are invested in these cryptocurrencies, and so are certain pension funds. That might explain why the price went so ballistic in 2021, because everyone was in the crypto market. I mean, and then again, when everyone's in the market is when you want to be getting out. So let me leave you with a note, actually a quote. I know I threw a lot at you, but hopefully this is some good information. All this is interesting to me to kind of look in and see how far this goes. So there is nothing like losing all you have in the world for teaching you what not to do. And when you know what not to do in order not to lose money, you begin to learn what to do in order to win. Did you get that? You begin to learn. So with that, I provided you guys with a lot of information. Hopefully, kind of opens your eye to what's going on in the crypto market and how that might potentially affect the stock market and so forth. But yeah, I'll leave you with that on that note, and happy early turkey days, guy, and I hope you guys have a wonderful rest of the week.